It is 13 minutes past 10 on Friday, the 3rd of July. It's the day before Independence Day in the US and Independence Day for the pubs here in the UK. The market has been quite interesting this week. You've seen the FTSE is marginally up for the week, while the S&P is slightly down. Gold, interestingly, made a very interesting sort of multi-year peak where it's not at all-time highs in dollars yet, but it did make a high that hasn't seen since 2011, which of course was the last great gold bull run. But anyhow, in today's market broadcast, we'll be discussing some of the stories that we thought were most important for investors throughout the week, and stories that we think will become much more important as time goes on. Now, on today's broadcast, we've got Nikolai Hubble and Kit Winder. Nikolai on the macro side and Kit on the energy side. Nikolai, what stories have you been looking at this week that you think are most important for our listeners?
I think it's more or less official that the gold bull market has begun, or more specifically, the gold stock bull market. We had the S&P basically deliver one of its best performances ever. I think it's technically the best quarter in about 20 years, this bounce back that we've seen since the coronavirus crash. But gold stocks actually had their best ever outperformance of the S&P. So they surged far more than the rest of the stock market. And it shows how, when the gold price and the gold stocks crash during the initial phase of a market crash, they tend to come back stronger than ever, both the gold price and the gold stocks. And that's what we've seen. And that shows the power of gold to really play a key diversification role in your portfolio.
Very interesting indeed. It has been a while for the has taken quite a while, I would say, for the gold stocks to really catch up. Maybe it has something to do with the degree to which gold stocks got smashed after that 2011 bull run. But it does seem like they really are catching up. And as you say, they're starting to perform better. But there's been so much consolidation in the area, so many large miners taking over other large miners and small miners alike, that it does seem like when the bull run really does start getting started, the revenues and the profits they're going to be able to post are going to be really quite magnificent. Now, changing tack slightly, Kit, what stories have you been looking at this week?
Well, once again, I don't want to change tack. I always do this because Nikolai said something so interesting. I want to follow up on it. He said that the gold bull market is beginning, and maybe we should consider as a diversification strategy. I'm starting to think that we can go some big steps further than that and say we may be looking at a period for 10, 20 years when gold is not a diversification, but precious metals, commodities, hard assets, these kind of things form the very basis of our portfolios. And we start looking at equities as a diversification because I was chatting to someone, a guy who works at a hedge fund over in America yesterday. That's a podcast going out on my UK Uncensored today. And he was saying the way in which, central banks are operating, so you can have the fundamental side of why you would look at gold combined with an inflationary reason. And then the technical side as well, all three of the sort of major factors of sort of the macro environment, the valuations on gold stocks, and then the technicals of the charts that you can look at relative, as you say, to stocks, Nikolai. They've come together in a way that you rarely ever see. And, the return of inflationary arguments, those things aren't going to happen for 2 or 3 years and then go back to continuing disinflation for another few decades. I think we're starting to look at potentially a 30-year period where inflation is rising again, mainly because central banks are no longer scared of it. I think that's the main reason. So I think you could take what Nikolai says and take it a whole lot further and say that 1 year or 5 years down the line, everyone's going to wish they had more gold in 2020.
Very bold call indeed, Kit. This is something of a small, almost nitpicking, but specifically, why 30 years? What's going to be changed after 30 years?
I suppose 30-year is shorthand for a generation.
A long time.
Change. Yeah. So if you look at, for example, the period of disinflation we've had is probably probably 40 years, isn't it, since the end of the 70s when inflation was peaking and when Volcker got it under control in America. And it's very interesting. We had the same thing here, but in quite a different nature. But yeah, so I suppose I think that this is a powerful force that goes in multi-decade cycles rather than multi-year cycles. And potentially the driving force is the amount that central bankers are scared of it. And right now they are begging for it.
Quite. It is something that Nicola and I and Charlie Morris, in fact, have been writing about in this month's issue of the Fleet Street Letter Monthly Alert, which will actually be going out later on today, where we've been looking at inflation as the big, a big secular force of inflation, maybe something that's going to arrive now when you consider the amount of government intervention that's we are now witnessing, and not just from the central bank side. Well, central banks are really dying for inflation. They haven't managed to get it for the last few decades, really. When you're looking at the Treasury Department and the sort of spending power that they can extend, perhaps when they're working in concert and when the government's managed to sort of coerce the commercial banking system to start printing money, perhaps that's when we're going to start seeing the inflation really break out. But Kit, you're generally on the energy side, right? Now, in an inflationary environment, energy stocks as well as gold stocks, but in an inflationary environment, energy stocks should do really well at that as well, right?
Yeah, well, I suppose, the return to inflation is one part of the way that I'm seeing the world right now. The other big 40-year changes is from oil and fossil fuels towards newer energies, or at least decarbonized energies. So I talk about the renewable side a lot and the clean technology side a lot, but there's also a lot of potential for reducing the carbon intensity of fossil fuels and gas, especially. But yeah, I suppose in an inflationary environment, energy is one of those things where costs are more flexible. And so the pricing power argument could play out. But, one of my big arguments as to why inflation is such a threat is that I wasn't alive for a single year in which we were in a period of rising inflation. I don't have any experience of what that is like. I've looked at the energy transition over the last 2 years specifically in a falling inflation environment, and they've done very well. So I actually would hesitate to say too confidently anything about what happens with the energy transition regarding inflation. All I would say is that I would consider the energy transition a powerful enough force to match pretty much anything that comes its way at the moment.
Yeah, the fact that I haven't been alive for any of the 70s is something that I feel kind of hesitant to be talking about how things will work when inflation returns again, when it's something that has been the world was completely different the last time we had a big secular inflation run. Nikolai, what do you make of all that? How do you think energy might play into a secular inflation theme?
Yeah, so Kit and I finally agree on something, but then he goes and steals the thunder of our monthly issue hours before it's due to go out, stealing all of our good ideas and mentioning them on the podcast. It's just perfect. But what I think investors should focus on here is, first of all, what they experienced during the 70s. So a lot of our readers did experience that inflationary period, even if it was as a young member of a family back then. So what they experienced back then is likely to happen again. And if you do look at what happened back then, commodities outperformed, people who borrowed a lot of money to buy properties outperformed, and people who lived on income based on investments performed very badly. They were effectively impoverished. So to get at these sorts of ideas, I actually emailed our readers and requested them for some feedback on what they recall from the 70s. And they confirmed what we said. The various debts that people had were inflated away, including the government debt, which is really what's behind the inflation. And people who lived on dividends and interest, and people who were waiting for the government lending that they made during the war to help finance the war effort, all of that was inflated away. It was no longer worth anywhere near as much. And a lot of people saw their parents and their grandparents go from being wealthy to being impoverished. And it's fascinating to read our readers' recollections of what happened back then, and just how clearly all of the theoretical observations you would expect to happen actually did happen.
Right. I was very entertained and informed also by the answers that readers gave to you, and so much so that I asked readers over at Capital and Conflict what their experiences of it were. And I was very interesting. What really piqued my interest with one of the responses to you was how one individual was talking about how inflation had actually been really good for him and for his life as a young man. So during that period, because he was a young man and his wages could rise in line with inflation. He wasn't on any kind of fixed income because he was he was just starting out on the property ladder, and so inflation would erode his mortgage while the value of his property increased. It actually worked out really well for him. It was an interesting description of inflation, because most of the time people just talk about it in a very negative light. And indeed, plenty of readers came back to me with real horror stories of what the inflation of the 70s was really like. People where they were just going to thrift stores all the time. They couldn't get work because the employment scene was awful. It was very interesting to see some people say how they'd managed to play this inflation by effectively turning into property speculators. And this had become a massive second income for a load of people, because in some cases, property prices were doubling in 12 months, which I found very interesting. What do you think? Do you think that when we get inflation again, it will repeat in a similar way? So if we do get a strong inflationary impulse, leaving aside where the impulse comes from, do you think it will play out in the modern world in a similar way, or it will manifest somehow differently? Because the world is, of course, much, much different from the way it was in the 70s.
I'm not so sure it is. I think the most important parts, or the most important reasons for why there would be inflation, are very similar. And the key one being the level of government debt. So what really inspired me to ask our readers about their recollections of the 70s was, how did they repay Britain's war debt? We've seen a lot of headlines in the last few months about how coronavirus is going to leave our debt to GDP ratio at levels not seen since World War II. Well, the debt level of World War II was paid off. So the question is how? And the answer is inflation, or a combination of inflation and financial repression, which is what our monthly issue really digs into. So I think the similarities are what's striking. And so you should see a very similar sequence of events play out. Now, there's a lot of other things that happened in the 70s other than inflation that are really important, like capital controls and the IMF having to bail out Britain. And I think it will be very difficult for people to truly profit from inflation in ways that they would obviously think to do. So, for example, if we say on this podcast that property prices will boom once again and that will inflate away mortgage debt, the logical thing to do would be to go out and buy a load of buy-to-let properties and mortgage them as much as possible, and then wait for the house prices to boom, the debt to be inflated away, and you'll get rich. Well, my worry about that would be that I think they will impose rent controls. They will prevent landlords from raising rents at the rate of inflation. And so landlords will be stuck with a huge mortgage bill as interest rates rise. And that could tip up the whole idea and make it dangerous even. So there's a lot of other considerations that need to be factored into this prediction of just inflation. And that's one of the things that our monthly issue goes into. My suggestion would be to focus on gold because of the other constraints that go along with inflation, the capital controls and price controls and things like that. Because gold is a way of betting on the failure or the unintended consequences of the policies and them going wrong. And I think that's where the strongest position is.
Kit, what's your thoughts on that?
Yeah, so I mean, financial repression is something that I've really not looked into a huge amount. I imagine I listened to perhaps a similar Russell Napier podcast or something that you guys did. So that's about the limit of my knowledge. And with talking to you two, I suppose one of the interesting elements will be what happens in Europe, because capital controls is something that happens at a national level. And this would be something I wanted to ask you, Nikolai, about. How does financial repression work in a recently formed unified currency such as Europe? That will be a very interesting thing to see. And inflation is another thing that will, further divide a single currency union in Europe. So it does seem as though there's simply more problems ahead for that body than ever before.
Yeah, is inflation a problem or a solution to the Eurozone's problems, Nikolai?
Well, I think that inflation is a textbook example of how these things go wrong. And it's a textbook example of historically how these things would go wrong. So Italy and Greece historically would, when they were in currency unions with the rest of Europe or parts of Europe, they would effectively print too much money. They would add coinage that they weren't allowed to under the agreements of the currency union. And that's why they'd be the first to leave, because of this inflationary effect. If inflation happens within the Eurozone, it should happen in certain countries more than others. That's what we've had happen with house prices. So before 2007, we had a house price boom in places like Ireland and Greece and Spain. And we had an economic bust in Germany. That reversed after the 2008 crisis, where you've got a housing boom in Germany, an economic bust in places like Greece. Well, if inflation, consumer price inflation emerges instead of housing booms, then you'd expect the same thing. You'd expect higher levels of inflation in some countries, but not others. And at that point, a currency union becomes extremely untenable, because the ECB is printing money like mad, but the inflation is showing up in some countries more than others. And that is going to make, especially the Germans, extremely uncomfortable.
And to go on from what the Germans might do when they become uncomfortable?
Well, they'll either force the ECB to cease its policies, and the first attempt at doing so has failed miserably. I think yesterday or today, when the German Parliament passed an approval of the ECB's bond purchasing program. But I think it will lead to populist political parties gaining more of a foothold at first, and then there's several ways the whole thing can break down. Either the ECB bends the knee to German monetary requests of tighter monetary policy, or the Germans leave effectively.
Right. It does seem like that force of inflation, something that we haven't seen in a huge way for so long. Before before at least two of us on this call were even alive. It does seem like the disruption that would create would be major indeed. Now, to pivot slightly, and if you guys will actually let me get away with it this time, to pivot slightly, what is your take on how the UK and the US now is starting to turn on China in a big way? Because I have plenty of opinions on all of this, but it has been very interesting to see now that the US is starting to get really quite hawkish on the China problem when it comes to issues like Xinjiang. So you've got the State Department issuing a directive about any companies that have any supply chain exposure to Xinjiang. You've got U.S. Customs stopping a 13-ton shipment, $800,000 of hair products, wigs that had been shaved from the heads of inmates. Apparently, this is standard procedure that female inmates have their head shaved before they're put into the concentration camps there. And you've got the US Customs not only seizing the shipment and stopping its shipment because it's from Xinjiang and it's possibly related to Xinjiang, but you got a lot of publicity about this as well. So it does seem like the US is really starting to take this quite seriously. It's something that we'd sort of predicted a few months back, but now you have the UK with offering citizenship of a kind to the Hong Kongers. Nikolai, what do you make of all that? What do you think the Hong Kong twist on the UK-China relationship is going to result in?
I think you've got to add as well the EU's branded China in several different ways as well. They branded them, I think, something to do with the subsidization of state-owned companies. There was an official designation of Chinese firms. I can't recall what it's called. And also Chinese misinformation about coronavirus. They took issue with that as well. So it's not just the US and the UK, and obviously India's heavily sanctioning China in its economy in various ways. And I think the Australians took up the battle axe as well, surprisingly enough, with some of the things they've been doing, some of the internal investigations of politicians and influencers in the university system. So everyone is starting to turn on China. I think the big question now is, for people who've predicted this for quite some time, is what the Chinese do. And I haven't seen many predictions or much analysis on what the Chinese reaction to the world turning on it will be. I don't think they're ready to sacrifice much trade and trade relations with other nations for the sake of, I don't know what it is they're trying to do, to be honest. Chinese nationalism or Chinese imperialism. I think their economy is too dependent still on trade. So I don't know which way they're going to turn here.
Kit, what do you make of it all?
Yeah, I mean, the first thing to say really is that this is really scary stuff, right? This is sort of the first time in my life that I've ever been scared that as a globe we might return to a serious level of warfare of some kind. I mean, you look at the things that they are doing in Xinjiang, as you say, and you've written so well about this, you two. They're genuinely terrifying, and they're the closest thing we've come um, on a global scale to what happened during World War II. So this is a very scary time and a scary topic. And you look at what's happening in Hong Kong, and I worked as a ski instructor in Japan, so I met a bunch of people who lived in Hong Kong. So I'm relatively friendly with them, or we know various people who worked there for a time, or things like this. I don't have amazing connections there, but you fear for those people in Hong Kong who suddenly sort of always thought as if they were kind of living as Brits abroad, but now they're not. And, for the natives as well, it's an unusual thing to suddenly watch your freedom slowly erode. It's death by 1,000 cuts from here on out. That's what it looks like. So this is really scary. I find it very disconcerting. From an investment perspective, the narrative no longer really meets much opposition. I would say that's one of the interesting things is, maybe 2 years ago when you were saying, Hong Kong Chinese currency, watch out, do they have enough US dollar reserves? Are they accounting for these properly? Can they maintain the peg? These kind of things. Suddenly you're not meeting that much opposition when you really question those things. For example, did you know, I think that of the 5 major global currencies, which is probably euro, UK, yen, dollar, and the renminbi. The renminbi has devalued the second most in the last 5 years, which is kind of weird given that it's a pegged currency. I don't know. The story is moving a lot faster than people realize. China has a debt bubble the size of Saturn, and the Chinese Communist Party is at the center of all of these things. And there is a final distinction to make, which is quite important there, that when we say China, I think we should be careful to mean and possibly to say the Chinese Communist Party, because I would say the 1.3 billion people are mostly not complicit in any of this and are victims as much as any of us. They don't live in a free country, and Hong Kong is soon to join them. And it is the Chinese Communist Party that has driven the debt bubble that will soon collapse once growth fails. And it's the Chinese Communist Party that has orchestrated these atrocities in Xinjiang, and then obviously the tensions with Taiwan and Hong Kong as well. So I think that is a distinction that it might be important to make as well.
Yes, perhaps we'll start referring to to mainland China as the People's Republic of China, as it is officially titled, or maybe will simply become a lot more explicit about talking of sort of anti-CCP sentiment rather than anti-Chinese sentiment. Of course, it was interesting to see that some of the politically correct and very easily offended people going for talking about Sinophobia as this great new threat that's going to engulf the West. Already trying to sort of silence people's speech and silence criticism of the CCP, which of course I think is completely justified considering what the CCP have been up to in places like Xinjiang. But it will be interesting to see how this turns out. There's one twist on this. I think one last topic that we could maybe discuss is we've been talking about inflation so far and debt so far, and how inflation is good for debtors. But here with mainland China and the debt bubble there, this is a place where inflation really isn't good at all because it's a totalitarian government, and the rules of it are it's not explicit rules, but if you have inflation there, right, and the food costs, fuel costs rise, that is not a good situation for a totalitarian regime that is in power, right? Inflation is not good in the People's Republic of China because inflation has the the capacity to cause a revolution. When people are only sort of happy with the CCP if their wages are rising, their lives are getting better. If that ceases to be the case, and the lack of freedom was tolerated because the economy was growing, well, when the economy stops growing and when inflation starts rising, food prices and fuel prices start rising, then I think inflation could be incredibly destructive, maybe even causing something like something of a revolutionary spirit, which of course is what the CCP fears the most. Nikolai, what do you make of that? Do you think inflation, that inflationary dynamic we've been speaking about so much, do you think that could come to China, or it's inevitably going to come to China. And in that instance, do you think, as I do, that this could be, this could really be, maybe even a death knell for the CCP?
Yeah, it gets complicated because of the currency pegs, right?
Right.
But if we're right about the commodity cycle and the energy cycle going from extremely cheap to going more expensive over time, and that being part of the inflation narrative, then you would think that a lot of China's key imports, for what employs a lot of Chinese people, are going to get more expensive over time, and that does make things dangerous. I suspect that the Chinese economy is still catching up to the more technologically advanced nations around the world, and I think that is going to matter more than the concerns about inflation around the world. What might matter more relevantly to our listeners is that the Chinese manufacturing base might no longer be a power for deflation as it has been for many years, and that could be another force of inflation. So if the Chinese are no longer producing things at effectively subsidized rates by keeping their currency cheap, then an inflationary shock from China could be added to all the different inflation explanations and narratives that we've already mentioned.
Kit, did you have any remarks on that?
Yeah, well, I suppose sort of the core price that people often look at in China is pork, which had its own pandemic, I believe, earlier this year before the coronavirus.
Yep.
And so pork prices over the last year or so have been shooting up. So it definitely is something to watch. All this talk there about sort of revolutionary sentiment and stuff, it grows, and the technology now that the CCP have is terrifying to control it. And I suppose the fear is how they respond to that sentiment. Really, that's what concerns me. Revolutionary sentiment is all well and good, but they will not easily relinquish power. And I think we would be scared to see the lengths that they would go to hold on to it. So, got to be careful before we start cheering that kind of thing, I would say.
Yeah, I think it's fair enough. I mean, I'm not explicitly saying this is a good thing or a bad thing. Really, I'm more just describing this as an outcome of what inflation could create within China. The more I think of, the more I sort of read of China, and the more that we try and speculate about what's going to happen there in the future, the more it seems to me almost like sort of North Korea light, where you've got the government in charge of so many different things, so much control, so much repression. It just feels to me like, even though North Korea is sort of run by China to a large degree now, it feels almost like China is sort of becoming more of a North Korean style totalitarian regime. But yeah, I mean, as I say, I'm not saying that cheering on the revolution and regime change, though I utterly detest the CCP. I'm just saying that inflation there is something that could cause something like a revolution. It's not quite the same as the Arab Spring, of course, but that was something that began with rising prices, right?
Indeed, that was fuel related.
I believe water had a lot to do with it as well, but don't quote me on that.
Michael Burry's, focus, isn't he? Michael Burry from 2008, the hedge fund that made all the money in The Big Short. His big focus is water now, and that would make a lot of sense. Fuel, obviously, fuel inflation is a bad one, because obviously, as you guys have spoken about, if you look at sort of France and the Gilets jaunes, was it Chile as well, and quite a few Central American states, the increasing price of fuel is what sparked all of these big protests that we were seeing in the back end of last year.
Yeah.
And I also, that is another thing. I find it amazing to think of all the things that were big news before coronavirus that have been completely sidelined. I mean, the trade war between China and America was the big one. Then you had all the tension in Iran. There was real surges of protests across the globe. Brexit was still sort of something that we worried about. All these things which suddenly have just completely faded. But they're not gone. I think it's worth pointing out.
Quite. Now, I think we've outdone our normal time limit, but Nikolai and Kit. Nikolai, do you have any closing remarks?
Buy gold.
And Kit?
Yeah, I'd echo that. And I will also just plug that on Wednesday, the EU is unveiling its hydrogen strategy. So for those interested in energy, that is a pretty big one, because what we saw Germany doing a couple of weeks ago was pretty enormous. And the continent following up on that should be an interesting read and watch for anyone who's interested in it. And also from an investment perspective, I think it's going to be pretty extraordinary. So do watch out for that.
Very good. Gentlemen, thank you very much for joining me for today's market broadcast, and thank you for listening to it. That is all we have for this week. We shall be back again next week. But in the meantime, I hope you have a good weekend. Hope you enjoy Independence Day as much as we can here in the UK. And we'll see you next time.